October 28th, 2024. Today was a tight trading range day the entire day. You could argue it was a trending trading range day since we had an upper trading range. Usually, if there's a trending trading range day, the upper trading range will last a little bit longer than it did today. But we did have an upper trading range right here, and then this started the lower trading range. So, trending trading range days, I'm just gonna and throw it in this section. But I mean, you can see trading range, a little more than 30 bars. And it's not a very good example, but here's a good example: 27 to 30 bars, and then a breakout, and then another trading range day. So, 30 bars, breakout, another trading range. So you can see this kind of stuff is reasonably common, but usually it's a lot, it's not quite this tight. The breakout's a little bit better. This is about a once a month day where you get a day that's just an extremely tight trading range. And it's kind of similar. It's obviously opposite, but similar to when you just get a relentless trend for like 80 bars. When you get something like that, you're thinking to yourself, wow, I really was not expecting that. We got a really massive trend out of that. And in this situation, it's the opposite, where you're thinking, wow, I thought we would break out at least once today. And instead, we just basically went sideways for the entire day. So I think that there's one hint really, or there's a hint towards all of that stuff that increases the chances of some sort of day like this, and that's that the always in position was never exactly clear today. We had a gap up on the day, and we had three straight bear bars. Good for the bears to have three straight bear bars in general, but after this big of a gap up, is 1, 2, and 3, especially with the tails, is that enough to convince you the market is always in short? It's probably not quite enough to convince you the market is always in short. But are we clearly always in long? No, because this is a pretty tight channel down. Over here, we never really quite got consecutive good looking bull bars. So we never really quite went always in long, lots of doji bars. So not really clearly always in long anywhere over here. Here we get a good sell-off for the bears, 18, 19, 20, but it's the first close below the moving average, bar 20. So do you really want to sell the first close below the moving average after 20 bars above the moving average? Not necessarily. So it's not quite always in short yet, but then we rally on 21. And yeah, we sold off, and you could, and again, you could definitely make an argument we're always in short here. I'm not saying we're not, but it's not clear, right? It doesn't feel like the market is clearly trending in one direction. Then we got a rally from 32 to 35, which increased the chances of at least a second leg up, and that we were probably going to go at least a little bit higher. We ended up getting a deep pullback and an attempt at a higher low major trend reversal. So you could argue we went always in long here, or we tried to go back to always in short, failed, and then a big bull bar closing near its high here. So you're thinking to yourself, okay, now we have a huge bull bar 39. We're about to be, we're always in long, right? When you see 39, you're thinking, all right, we're going to rally, and then it never even triggers, and we go down for 3 bars. So now on the close of 42, or how sure are you that we're always in long? Well, you're not really all that sure that we're always in long, but are we always in short? Well, I don't know. I'm going to have a lot of trouble convincing myself to sell this close after all of these good-looking bull reversals. So not really clearly always in short. We get another reversal up. We're probably always in long 46, but it just doesn't go anywhere. So it just kind of started to rally and then fizzled out and started to go sideways. And then in here, we tried to get back to always in long, but big bear bar 66. So really, again, you could make little arguments for sure throughout the chart of, well, we probably went, always in long or always in short here or there. But the reality is, if you just look at how sideways the whole day was, nothing was really ever all that clear. So it really wasn't all that great for stop order traders today. Something to keep in mind coming into the day is we're opening, pretty close to the midpoint of yesterday. And yesterday was a pretty large day. So when the prior day is a large day, I say large, obviously compared to today, it's really large, but 65-point day in general is reasonably big. But when the day is that large and the following day opens around the midpoint of that day, odds are we're going to go sideways for at least a little bit. And odds are it's going to be an inside day. And today was an inside day. So bar one, a bear bar, but a large tail on the bottom. Again, we have a big gap up for the bulls and a bear bar close on bar one, but a large tail on the bottom. So some bulls more interested in buying the deep pullback than they were at buying the market on the open. 20% chance on any given day that bar one is the high or the low of the day. And today it ended up being the high of the day. Bar two is an inside bar. It's low one short for the bears. So some bears, might take the short, taking a chance we sell all the way back off and potentially try to close the gap. You can see we kept an open gap with this breakout point, the 64 high, all the way until the end of the day when we closed it. So bar two, an inside bar, a low one short for the bears. The bulls are hoping it's some sort of two-legged pullback on bar one. and then a second leg down on 2. So a two-legged correction. And they're hoping to get some sort of rally. But again, it's probably just better to wait. 3, another bear bar. It triggers the low 1 short below bar 2 for the bears, and odds are we're going at least a little bit lower after 3 straight bear bars. However, large tails 1 and 2 and 3, it's really not that great, and the body size is pretty small. So are you going to sell the close of 3? You probably could for another leg down, but it's really not all that ideal. You probably want to see at least one more bar to confirm the market's always in short. And instead of getting that one more bar to confirm the market's always in short, you get a bull bar on 4. That was a common theme today. When the market was about to flip to always in and one particular side needed one more bar, the market was constantly reversing. It was never really giving either side the one more bar that they wanted. So the market pretty much stayed in equilibrium all day. Really great day for limit order traders, obviously, and a really poor day for stop order trading. So bar 4, an outside up bar, sellers above 3 most likely for at least a small second leg sideways to down. 5, another bear bar, but a large tail. We have large tails 1, 2, 3, 4, and 5. So we are selling off, and it is a reasonably steep or reasonably tight channel. However, there's large tails on all the bars, so I don't really think we're going all that much lower. 6, a doji, or sorry, I think I was on 5. Well, no, I just did 5. Okay, 6, a doji bar. So again, we're clearly obeying some sort of channel line. You can see the lows 2, 3, 4, 5, and 6, these lows. So clearly traders buying around the trend line, not really as interested in buying, clearly traders selling the pullback, not as interested in selling the trend line. Bar 7, a doji bar. It's a high 2 for the bulls, so it's a second reversal. First reversal above 3, pullback 4, 5. First reversal above 3 during 4, pullback 5, 6. And then another bull close 7, but it's just a big doji bar. Who wants to buy above 7? Really not all that great, considering that it's just a giant doji bar. And although it is a high 2 on the open, we have a tight channel down, so we're probably going to get another leg. So 7 is not really a great looking low of the day. 8, follow through for the bulls, but a large tail on the top. So I think that's a little bit disappointing. Not as good for the bulls as it could be. They're hoping to get consecutive bull closes and a rally up to the high of the day or around the open of the day, but probably going to be disappointed if we get there. 9, a doji bar. So 7, 8 consecutive bull closes, yes, but a doji bar on 7 and 8 has a tail, so really not as good as it could be. We're in the middle of the trading range. 9, a disappointing doji bar. Probably buyers below. It's not like it's a good low 1 sell. However, 7 isn't really a very reliable buy, so we might go a little bit higher. We might need a second leg from 7, 8, but I think buying below 9 is probably a scalp. So you can see there are buyers below 9 in a doji bar on bar 10. So consecutive doji bars, 9 and 10, consecutive bear closes. But the problem with doing anything on stop order here is 6, 7, 9, and 10 are all doji bars. So if you're staring at bar 10, 4 of the past 5 bars have been doji bars. Is that a sign of trading range trading or trend trading? Probably, excuse me. It's probably more of a sign of trading range trading. So probably sellers not too far above, probably buyers not too far below. 11, a bull bar, but a large tail on the top. So really not all that great. It might just be 2 legs up, 1, pullback 2. The bulls are hoping that the rally continues and we keep getting bull bars and get to a new high, but we can't seem to get a bull bar closing near its high. The bears are hoping that any sort of rally becomes a second leg trap towards the top of the trading range and we start to go sideways. 13, a big bear bar closing near its low. It's a possible high of the day. We're probably always in short, but it doesn't trigger is the problem. So the bears, they want a double top bear flag, 1 and 13. And they want to sell for a measured move down somewhere around here, maybe 40, 50% chance that we get it. But I don't think selling below 13 is all that great when it triggered below 12. Could you potentially take it for why is it not great, by the way? It triggers below 12 because it makes 12 the signal bar, 13 is your entry bar. So it's really not as good as it could be. You wanted an inside bar there if you were going to sell for the double top bear flag. Or you could argue that the gap up is the bull trend, and then we have a trend line break to bar 7, and then we have a lower high major trend reversal on bar 13. Sorry. My voice is really dry today. I'm not sure why. 14, an inside bar, is a high 1 for the bulls. So the bulls, it's a third push up. Everyone sees the third leg up, right? First leg to 8, second leg to 12, and now third leg starting on 14. The bulls are hoping that this is a high 1 that turns into a swing trade. It is a swing trade if you're buying. And you're hoping that we don't touch the moving average and we just start to rally, get a breakout above the high, and some sort of measure move up. The bears are hoping that the high one ends up failing, and that 13 holds as the high of the day, and we get another lower high. 15, what's more likely? Probably the lower high, considering the fact that 14 is a low probability swing trade. 15 consecutive bull bars, we're probably going at least a little bit higher, probably to around the bar 12 close. It's looking like it's going to be a third leg up, unless the bulls can get, good looking bull bars closing on their highs above the highs of the day. Then odds are increased that we get some sort of entry move. 16, another bull bar, but again, large tails on the top and the bottom. Looks more like a doji bar. So it's towards the top of the trading range. We're in the area of the top of the trading range, and momentum is slowing, right? The best looking bull bar was the first one. This is a little bit worse. Now this is worse as well. So momentum is slowing towards the top. And for the traders who are consistently profitable and taking trades like buying above 14, they do not have a lot of patience in these trades. They're taking them basically hoping that we're going to get a really good looking, quick rally. And if we don't get it, then they're just going to be quick to get out. And we get another inside bar on 17. It's a double top with 13. You could argue it's a triple top, 1, 12, 17. It's a triangle, though, really is what's important. So we have a triangle, and we're at the apex of it. So what happens on 18, right, is the bulls who bought whatever, 14, 15, 16, see 17 in a bear close before we get the breakout. Now they're too concerned this is a third leg it, so they're exiting their longs, and that's what causes the bear bar on bar 18. I think always in long bulls exit below 18, and bears can take the sell. That was probably the clearest entry of the day, was bar 18. But even then, you're selling going pretty much right into the moving average, and you're not really sure what that's going to look like, which is why a lot of traders ended up scalping out, right? If you sold below 18, you were able to pretty quickly make 5 points, even a little bit more. A lot of the traders were pretty happy to make 5 points and scalp out around the low of the day, especially considering we hadn't had to close below the moving average yet. So the reason this big tail exists is because there are bulls willing to buy the moving average and scale in lower, betting that the first reversal below the moving average is not going to collapse. It's at least going to go a little bit sideways so that they'll be able to make money. So 19, a large tail on the bottom. Bulls are hoping it's double bottom, but not really all that great. 20, a bear bar, large tail on the top and the bottom. We're right on a flat moving average, or the moving average as it's becoming flat. However, 20 does close below the moving average. So if the bears can get consecutive bear closes below the moving average, then there's an increased chance that we're going at least a little bit lower. But with, no bars, or sorry, what was it? Yeah, with only one bar closing below the moving average, the bears are going to need at least consecutive bear bars here. And we have a large tail on 19 and a lot of tails on 20. So not really too high of odds that we're going a whole lot lower. 21, bears buying back shorts, and that's what causes the rally on 21. However, after 4 straight bear bars, 17, 18, 19, 20, what are limit order bears going to do? They're going to sell above 20. They're thinking we're probably always in short. It's better to sell above this high. Again, I think this was the most clear it was all day that we were of any always in position. And it still wasn't all that clear, but I think it was the most clear here that we were probably always in short. And you can see when we got a rally, this is probably when it became borderline always in long and then confusion the remainder of the day. 22, an inside bar, bear bar closing near its low. It's a low one short for the bears who sold for any reason, probably going at least a little bit lower. So on 22, so sorry, I think I said 21, I meant to say 22. So probably going at least a little bit lower, but we are closing on the moving average. 23, consecutive bear bars closing below the moving average. It could be a second leg down, but bears are hoping that we go at least a little bit lower. 24, tail on the top. The bulls are hoping that it's 2 legs down and that this high tube is going to work, but no one really wants to buy above bar 24. It also is not able to close above the moving average, so I think that's important as well. 25, a big bear bar, but a large tail. It's 3 legs down to bar 20, 23, and 25. So it's 3 pushes down to a new low of the day, probably buyers in this area. But for now, we're going at least a little bit lower. 26, a doji bar. So really not all that great. Yeah, maybe we're going a little bit lower, but 26 is not the pause bar you wanted to see. It looks more like 3 pushes down than anything else right now. And if it's not going to be 3 pushes down, this is kind of what you need to be evaluating when you're staring at a third leg. You need to be looking at the context. Is this, the context and the price action that is relevant to make this third leg a first leg, or is this probably just a third leg? And considering the fact that we've been in a trading range day all day and that this breakout, the follow through bar is a doji bar on 26, it seems to me a lot more like we're just in a third leg in a trading range. So 27, another bear bar, but a huge tail on the bottom. So again, looks like 3 legs down to me. 13, 19, and 27 looks like a possible wedge. When you get 3 legs down, I'm normally expecting a couple of legs sideways to up. Again, it's pretty rare that we get to bar 30 and then we just go sideways the entire remainder of the day. That's obviously pretty abnormal, but it obviously does happen sometimes. In days like this that end up becoming essentially trending trading ranges. 28 is, it triggers the high 3 above 27, but imagine there's probably sellers above scaling and higher. So large tail on the top of 28, probably sellers above, probably buyers below. 27 is your signal bar, not great. 29, a bear bar closing near its low. So what is 29 trying to do? 29 is trying to break out below the 27 low. This is a wedge, 1, 2, 3. The bears are trying to get a breakout below the wedge. So if you have a tight channel like this and you want to get a breakout to the downside, what should it look like? You should probably see a couple of pretty good looking bars like 66. So you want, if you're selling below 29, you want really great follow through, a huge bear bar closing near its low. And what do you get? You get a doji bar on 30, which is the bare minimum follow through that the bears could have gotten. So it's really not all that great on 30 to be short. The bears who are short, disappointed that 30 is the way it is. A lot of them will end up scalping out around 1-to-1 true risk. Somewhere in this area, or maybe they even got 2-to-1 true risk, right? Yeah, so the bears who sold below 29 got 2-to-1 of their true risk during 31, and 30 was a doji bar, so they ended up basically just bailing out on the trade. That's what caused the bounce on 31. Once it doesn't close below the low of 27, it's a failed breakout. So a lot of the bears, quickly disappointed, realized they sold a low 1 short at the bottom of a trading range, buying back shorts, causing the rally on 32. 32, a bull bar, but a large tail on the top. Probably, sellers not too far above, but it's the bottom of a trading range. So while the bar is not good, right? 32 is not a good looking bull bar to buy above. The context is good for a bounce. So we're probably going at least a little bit higher. 33, consecutive bull bars, a large tail on the top. We're probably going at least a little bit higher. But the first reversal up is probably going to be minor, considering the fact that there's, it's a trend line break, right? So when you get a trend line break, a lot of traders expect an attempt at some sort of major trend reversal, which we did get in here. But again, there was just no trend to be had today. 35, another bull bar. So, sorry, I think it was on 34. So 34, bull close above the moving average. We have a pretty even number of bull closes above the moving average and bear closes below the moving average. So it's not really the moving average is not as important right now as it could be. It's mostly important because it's going sideways. 35, another bull bar. So we have 4 straight bull closes. We're probably going to get a second leg sideways to up. However, we have a reasonably tight channel down from 17 to 31. So it's hard to trade against a tight channel in this sort of situation, but some traders will do it. So 35, we're going to get a second leg sideways up, but we're probably going to get a deep pullback first. The doji bar on 36 is relatively disappointing. Follow through for anyone who bought or was looking to buy. We just get a doji bar. So we're in the middle of a trading range, a doji bar. Again, 32 through 35 is going to get a second leg up, but just a relatively disappointing area. 37, a big bear bar closing near its low. This is disappointing for the bulls. You're probably going to get a bear bar after the doji bar, but it's disappointing to have it be such a large bear bar. Some bulls who got the close were quickly disappointed and just got out of break even after 36. And that's part of what's causing 37, a bear bar closing near its low. The bears are hoping bear surprise and that the bulls get trapped and we get a big sell off, except instead we get 37 and then consecutive bear bars 37, 38, but it ends up just being a buy vacuum test of 32 through 37 or through 35 low. So this is a prime example. It's a trading range day, and what do traders do on trading range days? They, instead of buying the highs of bull bars, they buy the lows. So do you buy the close of 35? Well, if you're trying to be ideal, which is really hard to do, but the ideal management is to recognize it's a trading range day and it's the middle of a trading range. So instead you're buying the low. Look at 39, a huge bull bar. Did the bulls buy the close of this bar? No, but they bought the low, right? They bought the 39 low during 41, scalped out, and then they bought the low of 29 or of 31 during 45. And you can see when we started to rally back up into this area, they just ended up scalping out again rather than buying more. So 37, 38 consecutive bear bars. Are we always in short? I don't know. We're probably always in long. The bears probably need, or we're probably not quite always in short. I would say the bears need one more bar. And then instead of getting one more bear bar, what do we get? We get bar 39, a huge bull bar. It's about half the range of the day. So really, really massive bar. Probably going at least a little bit higher, going to get a second leg sideways to up. it's a higher low major trend reversal for the bulls. So they're hoping to get follow through and basically a massive rally here. 40 inside bar, disappointing. Low one short for the bears, but really not that good with, again, a huge tail on the bottom. So probably not going too much lower. 40, 41, an inside bar. So we have consecutive inside bars, 40, 41. The bears are hoping that we get a breakout below and a breakout below the low of the day and a measure down. But the question you kind of got to ask yourself is, are we going to get a breakout below the low of the day and a measured move down after all of these reversals up? We've already gotten the move down. So, there's obviously a bit of bearishness in the market, but it doesn't look like it's going to be a big bear trend day, especially if you factor in the fact, look at all this rally, look at this, look at this. Obviously, we haven't seen this yet because I'm only right here. Look at this and this, right? What are the odds that we get a big collapse below the low of the day in a bear trend day? Well, they're not that great. And, the fact that the bears keep giving up giant bull closes like 39 and bull rallies from 32 to 35, I thought that made it a little more likely that we were going to rally. And I think that makes it a little more likely tomorrow that we rally. So I guess I'll talk about it at the end of the day. But I think that tomorrow, it's interesting because tomorrow you have to be patient and you have to be ready at the same time. Because if we open within this range, odds are the market's going to try and break out of this range tomorrow, right? It would be really unusual for us to just stay in this trading range for another 90 bars. So the market is probably going to try to break out of that range tomorrow. And if it does, you have to be really aware of the breakout and you have to be very ready to trade a failure if it happens. So if we try to get a breakout to the downside tomorrow and it fails and we get a reversal, that would probably be a good looking trade. So 42, a bear bar closing near its honest low. So good for the bears, 3 straight bear bars, 40, 41, 42. Enough for a second leg sideways down, but are we going a lot lower? I don't know. I mean, after 39, I have a tough time believing we're going a lot lower, but I don't necessarily know if we're going a lot higher. 43, another doji bar. So 4 straight bear bars, but mostly just doji bars. So really not all that great. Again, probably not going too much lower, probably not going too much higher. Sellers above 43 during 44. We're probably going to get a second leg down from 41 through 43. However, you do have to keep that, from 40 through 43. So as good as 44 is for the bulls, it's mostly just bears buying back shorts, giving up on a big bear trend. But they know they're going to get a second leg sideways to down. So there's bears selling above 43, scaling in on 44. 45 is the second leg down. So first leg up, pull back, second leg up, first leg down, pull back, second leg down. So 2 legs up, 2 legs down. And 45 tests the exact low of the day, 31, so double bottom. And then 46, a bull bar closing near its high. It's an exact double bottom. And the bulls want a measured move up, maybe somewhere up here towards the high of the day. Not an unreasonable area. Mind you, we actually did not break out of the Globex high or low today, and that only happens about 10% of the time. So pretty abnormal for us to not break out below the Globex low or above the Globex high. 47 consecutive bull bars. So 46 bull bar closing near its high. 47 consecutive bull bars. Probably going at least a little bit higher. 48 buyers below 47. After 46, 47, there's going to be buyers below 47 for a second leg. Big enough full surprise that we're probably going to get back up into this area. 49, a bull bar closing near its high, but we need to get some follow through at some point. It's okay if it pulls back, but again, we need to rally. And then 50, an inside bar, disappointing, possible low 2 short for the bears, but no one really all that interested in selling a low 2 here. 51, an inside bar, a bull bar. We have consecutive inside bars, 50, 51, possibly 3 pushes up, 46, 47, 49, and 51. So probably sellers somewhere above. 52, an outside down bar, probably buyers not too far below, probably sellers not too far above. 53, consecutive outside bars. So 52, 53, outside pattern, breakout mode pattern. But again, we're at the top of the trading range. I know, you can look at it as the middle of the trading range, but this was pretty clearly its own trading range. And then we have devolved into this. And it's pretty clear that the market knows this is the high. It looks like it's the high. So we need to get a breakout above that before anything else. 54, an inside bar, a doji bar, probably buyers below, probably sellers above. And you can see we got buyers below during 55, probably sellers not too far above. Large tail on the 55 low. And 56, a bull bar, but it is a wedge rally, 3 pushes up, probably sellers not too far above. 55, scaling in higher. 57, I think, is really disappointing for the bulls. I think most bulls will exit below 57 after a few legs up. Bulls really wanted to see, the market break strongly above the high. And 46 was kind of their chance to do it. So after you get 39, you get this rally, this and that. The bulls had a good chance here, and then we end up getting a bear bar closing near low. Why, right? So this to me tells me that all of this doesn't seem to be working, and we might start to go sideways to down. 58 though, disappointing follow through to 57 because it's not great for stop orders. Anytime you're selling the bottom of a tight trading range here. And anytime you're buying, you're going to end up buying too high in the trading range. So it's really much better for limit order traders. 59, a big bear bar, but a tail on the bottom. It's just a second leg down. And then 60, sellers above 59 during 60, probably buyers not too far below. 61, another bear bar, but a tail on the top and the bottom. Doji, 60, 61. 62, a bull bar closing near its high, right at the moving average, but it's a flat moving average, so probably sellers above, probably buyers below. If you buy above 62, you probably can for a swing trade, 3 pushes down, but it's really not all that great because you're buying in the middle of a tight trading range. 63, a bear bar closing near its low, I would not sell. It's a third leg down. 64, a bull bar closing near its high. Maybe you can buy. It's a second entry reversal up, but the bulls need a good-looking rally. And then you get 65 consecutive bull bars closing near their highs. Some traders starting to think, okay, maybe we're about to start to rally. What do you get instead? A big bear bar, 66, making the market back to confused. But anytime the bulls got any sort of good-looking rally, the bears did a good job of making the market look confused again. And anytime the bears looked like they were going to get a sell-off, the bulls did a good job of getting a rally and making the bears confused again, which again led to trading range price action. So 67, a bull bar, but a large tail on the top and the bottom. We're traded up to around the bar 65 close, where the bulls bought, and it seems like some of them scaled in and exited their longs. Some bulls, again, look at where bulls are buying today. Are they buying the high of 35? No, they're buying around the low of 32, the buy climax low. Are they buying the high of 39? No, they're buying more on the low. So are they going to buy the 65 close? No, they're going to buy the 64 low during 67. So that's what happened there. 68, an inside bar, a bear bar closing near its low. Probably buyers not too far below, sellers not too far below, above. An inside bar 69, so II, failed breakout below on 70 and a reversal up 71. You can buy above 71, but again, look what we've done also so far today. So the rally 72, 73 just gets back up to around the high of the trading range, around the bar 60, 65 close. 74 trades below 73, ending the first leg up, and the bulls get a second leg up, but it's just 75 rallying to 73 close. You can see bulls were not hopeful that we were going to get a big rally. So instead of buying more up here, trying to drive the market upwards, they just gave up, and that caused 75. And you can see that led to a big trading range today. As far as stop orders on the day, probably 18 is okay. I mean, 46 makes sense, but it just ends up being disappointing. In theory, 57, but I would just wait. It's high trading range. And that's really it. I mean, maybe 64, maybe 71, but they're kind of difficult in the middle of trading ranges. So really not money you get stop orders on the day. If you didn't do anything today, that's completely fine. The issue is what some traders will do is they'll just start taking all sorts of stop orders, thinking that it has to break out, and then it'll just end up with a really massive loss. On the daily chart, I'm going to turn on Globex. So on the daily chart, it's an inside bar, but again, you'd have to imagine there's buyers below there tomorrow. So if we do trade below that low tomorrow, probably buyers below and a reversal back up. You can see we haven't been below the moving average yet in quite a while, and I'm not sure that this is the bar that's going to lead to a big, bear breakout. So probably buyers somewhere below, scaling in lower. I wouldn't be surprised if we got an outside up bar tomorrow. Tomorrow will, excuse me, 1 second, gotta grab another drink of water. Tomorrow will probably be an outside day. This is a really small day, so you have to be expecting an outside day tomorrow. The weekly chart, you can see we're trying to rally back up to around this close, and it's possible that if we get there, the bulls are going to end up selling out of their longs. Because you can see, let's say they bought this close, disappointed this, but they scaled in. They're trying to get back up here. The monthly chart, it looks like it's going to be a bull close. We have 2 or 3 trading days left in the month, and the bears have 60 points to cover, and they can cover 60 points in an hour, let alone a day, let alone 3 days. So very possible that we sell back off into this area. I just don't think, or around the open. I don't think it's all that likely though. However, I would pay a lot of attention to 58.07 over the coming weeks, or the coming couple of days, because if we get back to that area, there's probably there's going to be a big fight over that at the end of the month. All right. I think that is going to be it for the day. And yeah, there will be a normal trading video tomorrow. Live trading.